Hi everyone, welcome back to Bearish Podcast. This is a Q&A session. So the question is, when the stocks like Amar Raja spiked 20% in a single day, who are those buyers? Are they long-term buyers such as institutional investors or they are traders? When such a spike happens, how can we assume that this spike will last long or will it go down again after a few days? If this kind of abnormal purchase happens by traders, within few days the share price will fall again.
Okay, got to understand. What's happening with Amaraj batteries is not because it is some weird deal which has happened. It's based on a company, and there's some time back saying it's undervalued. He said take this into consideration because the company's fundamentals are strong. What has caused this sudden spike is it's very apparent. It is because of political reasons.
Okay.
People who run the company, friends of theirs in the political circles in Andhra, have won the elections and they've come out very strong. Things are looking very good for that company. So that means it gets a lot easier for the company to do business. For various reasons, we know that. I don't need to explain it in greater detail than that, what that means. Now, getting to the question of who's buying these shares, that you can go to NSE and BSE website. That website will tell you every day they put reports on who's buying, how much. You can see who are the big buyers. Big buyers names will be mentioned, including institutional investors, foreign investors, who's buying what. You can find out company share volumes.
Okay.
I think within the same day they publish or the next day they publish. So you can find out if you're really curious to know who's buying it. Now, what does this mean for you? Well, unfortunately for you, if you miss this, you missed it.
Yeah.
Okay? Sour grapes. Feel bad. Move on. Does it make sense buying it at these levels? No. Okay, I can understand having FOMO. So you are hoping that the price suddenly will correct because you saw it spike 2 days later, like what happened in the election. This spike is not a speculation in spike. This spike is now the earnings of this company is going to go through the roof for the next 4 to 5 years, as long as the favorable winds are blowing in its sails, is what investors and analysts feel. So they're raising the price in future earnings. Until and unless there's a change in that, you will not see a correction. Change meaning what? The favors this company is enjoying right now with the current local government changes, meaning the people who will help this company speculatively suddenly are neutralized or removed or not there for whatever reason, then the market might get jitters and feel the company may not do so great. Now that this access they are going to enjoy is not there anymore. That speculation, yes, can be a reason. Or two, there is some other reason, like one of their partnerships they've just signed falls through. The earnings doesn't seem like it's going to be there, or there's a change in management of the company may cause this. But as of now, I don't see any of that happening. And these prices levels, what you're seeing, Amaraj batteries are going to stay there for some time. If anything, it might even go up a little more. Doesn't warrant you buying it because it's become overpriced. I'm sorry that you missed it. People like Rupesh are lucky. People like you and me are not so lucky.
Even I am not lucky.
There you go. So that even Arun didn't happen to catch it, though Rupesh managed to catch it. It happens. So for the people who did manage to invest ahead, respect to you, congratulations to you. For those of us who missed out, don't worry, there will be other opportunities. Right? We are not here to gamble. So no one could have predicted this. A lot of people look back and say, yes, I knew this was going to happen. Yeah, everyone does that. If so, then tell me what's going to happen tomorrow then. Nobody can.
Yeah.
So keep that in mind. We're not here to gamble. We're here to invest. Sometimes market rewards you.
And this in case of gap up, it is a positive thing for the investors. Sometimes a bad news comes and the stock gaps down to a level and the investors cannot sell their stocks. So at that time, what can investors do?
That is, you can't do anything. That happens when the stock exchange decides to stop trading of a certain share, or there's something known as a lower circuit hits. You should not be holding on to shares like that. Or this company, everyone knows this fraud is happening there. You should definitely not be buying it and speculating in it. So if you're holding on to a company which is so worthless, where lower circuit is kicking in, or trade is being suspended, then you're speculating. Then be careful. You should not be buying and investing into companies like that. And trust me, you'll know from far away that this company is sinking. So when the circuit breakers kick in, you can't trade. You're locked out. And this happened even during the COVID crash, when the whole market was free falling. We kept on hitting circuit after circuit. We hit 15% circuit. Then they gave a 15-minute cool off.
Okay.
After cool off, they opened again. Again, the market fell. I think by 10%. Then they waited for 1 hour, cool off. Then they opened again. Then what happened was, it fell again. Then they said, market is closed for the day.
Okay.
So it can happen for an individual share. You're selling, breaks, 3 circuits hit in. Then they'll say, today you cannot trade anymore in the share. So you should not be investing in companies like that.
Okay. So I hope that this video is informative, and if you like this video, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.